What if I told you that one company's financial report, released on a Wednesday afternoon, has more power to move the global economy than a central bank announcement? That the retirement savings of millions of Americans could swing based on the sales figures of a single product? This isn't a hypothetical. This is the reality of the Nvidia earnings report. Welcome back to the channel. Today, we are breaking down what is, without a doubt, the most anticipated, most scrutinized, and most important corporate event of the season. The Nvidia earnings report for the second quarter of fiscal year 2026. Now, you might be thinking, it's just one company. But that's where you'd be wrong. Nvidia isn't just a company anymore, it's a $4.4 trillion behemoth. It is the undisputed king of the AI revolution, and its quarterly report has become a bellwether for the entire global technology sector and, by extension, the stock market itself. So, stick with me, because by the end of this video, you will understand exactly what the headline numbers mean, the high-stakes geopolitical drama playing out with China, and what this report signals for the future of AI, the economy, and your money. And trust me, you're going to want to watch until the very end, because the final verdict might surprise you. Alright, let's get straight to the numbers. Before the official NVDA earnings were released, Wall Street had set an incredibly high bar. Analysts were expecting revenue of around $46 billion. Let that sink in. $46 billion in a single quarter. That's a 53% jump from the same time last year. They were also looking for an adjusted earnings per share, or EPS, of about $1. Again, massive growth. But here's the catch, and it's a big one. As huge as those numbers are, they represent a slowdown. For the past year, Nvidia has been posting triple-digit growth. The question on every investor's mind is this the beginning of the end for the hyper-growth phase? Is the AI boom maturing? This is why the most important number in the entire Nvidia earnings release isn't actually about the quarter that just passed. It's about the future. It's the guidance. Wall Street was modeling for Nvidia to guide for about $53 billion in revenue for the next quarter. Anything less than that would be seen as a sign of weakness. This is the curse of success. When you're as big as Nvidia, you're not just competing against other companies. You're competing against your own legendary past performance. Simply meeting expectations is no longer good enough. The market demands a massive beat and a blockbuster forecast, and that task gets harder and harder every single quarter. But before we get too lost in the numbers, I need to ask you a favor. If you're getting value from this breakdown, do me a huge solid and hit that like button. It tells the YouTube algorithm that this is good information, and it helps us reach more people who need to understand what's happening with the NVDA earnings. It takes you 1 second, but it makes a massive difference for the channel. Thank you. Now, let's talk about the elephant in the room, the single biggest risk. The biggest wildcard in the entire Nvidia earnings story, China. This is a geopolitical thriller playing out in real time. On one side, you have Washington trying to slow China's technological advancement by restricting its access to the most powerful AI chips. On the other side, you have Beijing pushing for technological independence and urging its companies to buy homegrown hardware. And caught right in the middle, Nvidia. China used to be a massive market for them, about 13% of their total revenue. But US export controls put a stop to that, forcing Nvidia to design a less powerful, compliant chip called the H20 just for the Chinese market. But here's where it gets crazy. In a recent unprecedented deal, the US government agreed to let Nvidia sell these chips to China again, but with a catch. Nvidia has to give the US Treasury 15% of all the revenue from those sales. It's not a tariff. It's a direct tax on a U.S. company's foreign sales. This is a brand new playbook in the world of geopolitics. What does this mean for the NVDA earnings? It's a direct hit to their profit margins. That 15% cut makes the China business significantly less profitable. And worse, there's no guarantee the demand will even be there. Beijing is reportedly telling its tech giants to avoid Nvidia's chips over security concerns, pushing them toward domestic competitors like Huawei. We've even seen reports that Nvidia had to tell its suppliers to pause production of the H20 chip because of this pushback. This China situation is the ultimate wildcard. It represents billions in potential revenue but is shrouded in immense risk. Any commentary from CEO Jensen Huang on this topic during the NVDA earnings date call is scrutinized by investors around the globe. It's a tightrope walk with the whole world watching. So, with all that risk, why is anyone still bullish on Nvidia? The answer is simple. The demand for AI is unlike anything we have ever seen. The engine room of Nvidia's growth is its data center division. This is where the magic happens. Tech giants, we're talking Microsoft, Google, Amazon, Meta, are in an all-out arms race to build the future of artificial intelligence. And to do that, they need one thing: Nvidia's chips, lots and lots of them. These companies are spending tens of billions of dollars every quarter to build out their AI infrastructure, and a huge chunk of that money flows directly to Nvidia. For them, this isn't about short-term profit, it's about survival. They cannot afford to fall behind in the race to AGI or artificial general intelligence. It's a technological arms race, and Nvidia is the world's sole weapons dealer. And just when you thought their technology couldn't get any more powerful, they unveiled their next-generation architecture, Blackwell. The Blackwell GPU is a monster, promising a massive leap in performance for training and running the next wave of AI models. A huge part of this Nvidia earnings report is about the Blackwell ramp-up. Are they producing them fast enough? Is the demand as strong as they expected? Of course, this is where the AI bubble talk comes in. Skeptics point out that many companies investing in AI haven't seen a real return on that investment yet. They worry that this spending spree is unsustainable. And they might have a point. But for now, the tech titans are locked in a battle for the future. And that means the demand for Nvidia's hardware remains off the charts. This is a good moment to ask for your thoughts. Do you think we are in an AI bubble? Let me know your take in the comments below. I read every single one, and I'm genuinely curious to hear what this community thinks. Engaging with you is the best part of doing this, so don't be shy. So, we've covered the numbers, the geopolitics, and the overwhelming demand. Now, let's bring it all home. Why does this one Nvidia earnings report matter so much to you, even if you don't own a single share of NVDA? Because Nvidia has become a systemic force in the market. With its 8% weight in the S&P 500, a big move in its stock can drag the entire market up or down with it. If you have a 401k or an IRA invested in an index fund, you are an Nvidia investor, whether you know it or not. The ripple effect is massive. A strong report from Nvidia doesn't just lift its own stock. It signals to the market that the AI boom is healthy, which boosts other chip makers, server companies, software developers, and even the utility companies that power the data centers. It's a wave that lifts dozens of boats. A weak report does the exact opposite, sending a chill through the entire tech ecosystem. This concentration of power in one company is unprecedented. It means the market is hanging on every word from its CEO, Jensen Huang. The NVDA earnings report has become a referendum on the entire tech-driven economy. So, what's the final verdict? Is the AI boom over? Based on the analysis, the era of easy triple-digit growth is likely behind us. The challenges, especially from China, are real and significant. The bar for success is now astronomically high. However, the fundamental driver, the global multi-trillion-dollar build-out of AI infrastructure, remains firmly in place. The arms race between the tech giants is not a fad, it's a paradigm shift. Nvidia, with its technological moat and deep ecosystem, remains at the absolute center of that shift. The story of the latest Nvidia earnings isn't a simple one of good or bad. It's a story of a company navigating a complex transition from hypergrowth to becoming a mature, dominant force in a world that is being rebuilt in the image of its technology. The ride will be bumpier, the risks are higher, but its role as the engine of the AI revolution is, for now, unchallenged. Thanks for sticking with me through this deep dive. If you want to stay ahead of the curve on the biggest stories in finance and tech, make sure you subscribe to the channel and turn on notifications. You won't want to miss what's coming next. See you in the next video.